Hello. Welcome to the FAANG Show.
What is going on, investors? Hopefully you guys are doing well out there. That is right. It is Friday. We're doing a little vacation FAANG stock recap show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks. And do we have a great rotation out of these stocks beginning, or is it just pulling back to very normal technical levels? You want to stick around for that segment and see where these stocks are pulling back, since we have earnings this week from Netflix. You want to make sure you go back to the video feed and check that video out. Next week, we'll hear from Google and Tesla, and the following week, we'll hear from the rest of these companies. So a lot of things to talk about. Let's kick things off like we always do with Meta Platforms. Start the week at $4.98, and a lot of these stocks just had a complete massive sell-off, down 4.25% to finish the week at $476.79. Now, what is happening before earnings is you're seeing analysts such as Barclays start to trim the not-so-hidden AI cost in the terms of server build-out. When you're talking about Meta and Google and Amazon, they're building their own large language models. That costs tens of millions of dollars with not a lot of revenue coming back in terms of advertising or any type of product. And so will investors and the tech community continue to give these companies a pass, as it's really only NVIDIA that's generating large amounts of revenue and profit off the back of AI. Companies like Meta and Google and Amazon, to a lesser degree, they're spending lots of money on this AI with not a lot coming back in terms of revenue and certainly profits. And we'll see how Wall Street digests that. Meta reports their earnings on July 31st. Now, the company is eyeing a stake in the Ray-Ban sunglass maker. This is Luxottica. Now, I thought it was interesting this week as well. Luxottica made news as it acquired the brand Supreme, which was bought by VF Corp, I think just 2 or 3 years ago, for about $2 billion and maybe some change. Well, Luxottica, which again makes primarily sunglasses, although I believe they own the Oakley brand as well, which makes some clothing and those types of things. Well, they acquired the brand Supreme for about $1.5 billion, so a discount off of what VF Corp just paid for it just a couple of years ago. We'll see if this company expands into more than just a sunglass maker, into a bigger fashion brand. Could put it on the radar for other investments, and certainly Meta coming in there with an investment as well. Moving on to Apple, start of the week at $234.50, down 4.3%. Finished the week at $224, breaking a key technical level as well on Apple, which reports their earnings on August 1st. Now, a totally underrated product, and Tim Cook can send the check to the Investor Channel anytime he wants us, but the Apple is launching the HomePod Mini in a dark color midnight. I believe they have a black model, which I have at my home. I tell you what, if you got the Apple TV and you've got kids like me that are running around making all this noise, you can barely hear the TV, barely hear the announcers on the football game or the tennis match or whatever it is. Well, you sit one of these things right by your TV chair and you can hear everything. Underrated product from Apple. Now, the company is said to be holding discussions about licensing more Hollywood movies. This will be for its Apple TV Plus streaming product, which they continue to try to bolster up in terms of their own products and their own shows, if you will, but also maybe going back to kind of the previous model of streaming where you actually license the content instead of having to produce it all yourself, put all the money up front, like a lot of these companies are doing. And certainly Apple, as we know, when we go through their financials on August 1st, they certainly couldn't afford to do any type of Hollywood movies and TV production, as the company just obviously has tens and hundreds of billions of dollars just laying around, more or less. But licensing them from Hollywood could be a good strategy just to get more content on the platform. Now, interesting story here. An advertising company called Taboola, it's actually more or less a penny stock, TBLA is the ticker symbol. It's about $3.35 a share. They rallied on the backs of an Apple advertising deal. So if you're like me, you actually use Apple News quite a bit. They also have the Apple Stock app, which I actually don't use, but Apple has some properties where they're running ads against the content. Apple News is probably the biggest, I would assume, and Taboola is going to be able to serve ads on that platform. Moving on to Amazon, start of the week at $194, and on the week of Prime Day, the shares of Amazon down nearly 6%. You got to look at this technically. Shares of Amazon finished the week at $183.13. Amazon reports their earnings also on August 1st. Now, Prime Day sets a new record. What else is new? Every time Amazon does a Prime Day, I swear, we always have this press release that comes across from Amazon. Now, Adobe Analytics, which tries to track some of the sales, they said the first day of Amazon Prime Day, consumers spent about $7.2 billion, which was up 11% year over year. Now, in an inflationary environment, you would expect some price increases, but 11% year over year is very good. Now, obviously, the Prime Day results are not going to fall into this upcoming financial report that Amazon has, but more or less it's already priced in or baked into the estimates that analysts have for the company heading into next quarter. Moving on to Netflix. It was earnings week for Netflix, and it started the week at $658.64. Like all of these stocks, down 3.8% to finish the week at $633.34. We did a video on Netflix earnings earlier in the week. You want to go back to the video feed if you didn't check that out. They beat on the revenue side, beat on the earnings side. On the conference call, they're continuing to pursue higher margins. They guided for higher margins, although somewhat mediocre or flat revenue growth, and their ad business continues to grow. The company is moving more into kind of events or live sports, certainly with the NFL, also like a boxing match with Mike Tyson. They have other live events like the Tom Brady roast, and Netflix is just seeing in general the growth is coming from the lower priced ad tier rather than people paying to avoid the ads. Now, moving on to NVIDIA. Big down week for chip stocks this week as NVIDIA started the week at nearly $130 per share. Boom, you haven't seen this in a while for NVIDIA. Down nearly 10% to finish the week at $117.93. I'll have a link down below to my new channel here on YouTube. You'll want to subscribe. I will have a video this week on semiconductors, and it might end up being a regular series on that channel. So link down below. I'd appreciate if you subscribe. Now, Serve Robotics, which is also, we're talking about a lot of these penny stocks, SERV, robotics company skyrocketing after NVIDIA takes a stake in the company. According to a filing, NVIDIA purchased about 1 million shares on April 22nd at just $2.42 per share. And now Serve Robotics is, boom, after that news, up over $7.55. Now, if you've been tuned into the channel, we've talked about robotics is what's next, okay? AI is going to really usher in a lot of new products as it relates to robotics. Some of it is the humanoid stuff. Some of it is maybe behind the scenes in fulfillment centers and those types of things. Some of it's going to be at fast food restaurants, warehouses, and that is really, really coming very quickly, and NVIDIA is telegraphing that with their investments. Now, Broadcom saw its shares trade at a split-adjusted level this week at about $157 per share. Broadcom shares, just like everybody in the chip sector, under pressure this week as they held discussions with OpenAI about producing an AI chip. Broadcom, as most of you probably know, is involved in a lot of custom silicon products, including, most notably, Google's TPUs. Now, NVIDIA's CEO is not sitting on the sidelines. He's continuing to unload shares of NVIDIA as he sold another $30 million as a part of a plan that he set out early this year. Now, the chip sector lost about $500 billion in market cap this week as we saw NVIDIA down nearly 10%. Broadcom, AMD, they all took a hit this week amid export control fears. So you've got some pressure from the current administration just really putting the clamps down on China getting access to the machines and certainly the high-end chips. Also, former President Trump, who looks like right now it's his election to lose. Well, he came out with, typical kind of Trump-like comments saying something to the effect that I don't know why the United States continues to defend Taiwan against a Chinese invasion. And I'm paraphrasing here, the former president saying that Taiwan basically, quote unquote, took our chip business as well. And so for the most part, I think what we're going to learn or maybe have to refresh our minds with the former president, again, long ways till November, a lot of things that can happen between now and then, obviously. But if he does make his way back into the White House, Trump is known for making these kind of broad-based statements. They catch a lot of headlines and a lot of news, but at the end of the day, it's an opening salvo. It's an opening to a negotiation where potentially Taiwan maybe has to pay for more of the weapons that they use to protect themselves against a China invasion. Obviously, if you get a China invasion, it will be absolutely serious. And I will tell you guys right now, we'll talk about this probably more on our Sunday Chip show, but if China is going to invade Taiwan, they're going to do it over the next couple of months. You've got a sitting president who's incredibly vulnerable. You've got a former president who's taken bullets to the head. This is as vulnerable as the United States in this next couple of months, certainly into early next year, can be. And so if any of these rumors about any country taking over or doing an attack on another country, it's going to happen in the next couple of months because of the weakness that you have in the leadership here in the United States. Moving on to Google, start of the week at 186.82 and down. Ooh, bad technical sign from Google, down about 4.9%. Finished week at 177.66. We'll hear from Google next week, just 4 days from now on July 23rd. Now, Google is said to be nearing, look at the timing on this, a $23 billion deal to buy cybersecurity startup Wiz. Good thing they didn't agree to buy CrowdStrike, as most of you know, and we'll talk about when we get to Microsoft, had a massive outage this week. So this could be just one of the most brilliant timed things from Google. Maybe they have some inside knowledges on what was about to happen. I don't know. That's more conspiracy than fact, obviously. But you're going to see Google get into cybersecurity. Obviously, Microsoft's trying to make some plays in there with CrowdStrike creating a massive outage. I think you'll have some adjustments as it relates to what companies are using, and that could benefit Google. And maybe they just got a good deal here on the $23 billion deal. That obviously is massive. Now, Google and Microsoft are allowing Chinese companies to access NVIDIA AI chips. That's according to a report. So if you're in China, you can't go out necessarily and go buy one of these NVIDIA GPUs. You might be able to get one or two on the black market, but you're not going to build it. You're not going to be able to build an entire data center of the latest cutting edge NVIDIA AI chips. Well, what do? Well, you call up Google Cloud or you call up Microsoft, and maybe you do it through a shell company and make it so Google and Microsoft can't really tell where that business is set up or where that data is being used. And so obviously Google and Microsoft are going to become under pressure as, again, the current administration is trying to really put the clamps down on China getting access to these AI tools. Now, moving on to Microsoft, start of the week at 454.13, down 3.75%. Finished week at 437.11. Microsoft reports their earnings a little later than normal, about 10 days from now on July 29th. They usually report the same day as Google. Now, a major tech outage. I'm sure hopefully none of you were flying or were dramatically impacted by this. I tell you what, if you have one of these desk jobs, you might have had the day off because it bricked a ton of Microsoft systems basically worldwide. You had a grounding of most of the air flights. You had a bricking of basically all Microsoft computers, and it certainly put a black eye on CrowdStrike, and I'm surprised shares down just 11% on such a widespread outage. Moving on to Tesla, start of the week at 260. The electric vehicle maker could not avoid the losses that all these stocks had, down about 8%. Finished the week at 239.20. Tesla reports their earnings same day as Google next week. We'll be back home. We'll cover that end to end July 23rd for Tesla. Now, Elon Musk is saying he's fully endorsing the former President Trump following those really tragic events that happened last weekend. We had some inkling that Elon would probably be on the conservative side of the ticket, but I think he said that he wasn't going to donate any money to either side. Well, that is not the case. He is going to commit around $45 million per month, not $45 million, $45 million per month. And we've got like 4 or 5 months until the election. So this is the upwards of close to $200 million for a pro-Trump super PAC. And it's kind of interesting because Trump today pledged to end the, quote, EV mandate on day one. These has to do with the fact that you get nearly a $7,500. It used to be a tax credit. So you would buy one of these EVs, and when you did your taxes like in March or April the following year, you could get a $7,500 tax credit depending on your tax bracket and those types of things. Well, what's happened more recently is when you buy these EVs from Tesla or any of these EV makers, they're just giving you $7,500 off as basically a subsidy. So these certainly help out Tesla, but when we look at Tesla's earnings on July 23rd, they report just 4 days from now, we're going to see this company is profitable. This company also, not like Rivian, not like Lucid, not like Ford and GM, which are losing money on their electric vehicles. So I think in kind of a sneaky little way here, removing the EV mandate probably hurts Tesla the least out of all these EV makers, as Tesla has proven it can probably still make money on its EV sales, whereas the rest of these companies, even with the tax credit from the United States government, are still not making any money. And now the Tesla Cybertruck outsold the Ford F-150 Lightning in Q2, as Tesla continuing to roll out the Cybertruck in larger and larger quantities. And I think by the end of the year, could be one of the best-selling trucks, period, once they release kind of a lower price model. Now, Elon Musk confirmed that the robo-taxi team is having extra time to update the design before their big reveal event. We got no date. Initially, the robo-taxi event was scheduled for August 8th. Some rumors are it's pushed back to October. I had some people in the comments saying that the plan all along was to design a robo-taxi. No, it wasn't. Elon Musk has gotten on multiple conference calls and said the full self-driving moment would be the greatest increase in asset prices in the history of basically the entire world. Once every single Tesla on the road could be an autonomous vehicle to deliver people, deliver packages, to basically be a robo-taxi, it would increase the value of that asset. But now we are designing a completely separate car. This is going to take years and years to not only design it, but to do the testing and get the government approval on this type of stuff. Folks, I'll remind you, this Cybertruck, which is an absolutely stunning vehicle, this took like 4 or 5 years, and this is just a normal vehicle with a steering wheel. We're talking about a total radically designed vehicle with no steering wheel, a complete robo-taxi that supposedly could be able to maybe clean the interior of the car on its own, charge itself. Guys, we're like a decade away from this actually moving the needle on a nearly $800 billion company. Now, Musk is moving his SpaceX and other teams, I think Twitter as well, to Texas after California passed a controversial law. My assumption with this law is this will get tied up into some courts. This is pretty much a controversial law. I don't think this will pass the muster once you move it up the ladder in terms of courts. I'm not a lawyer. That's just the opinion that I've read. And also, if you live in California like I do and you send your kids to public schools, you probably should pull them out ASAP. Now, Elon Musk says the CrowdStrike software is deleted from all of their system as kind of like maybe a thorn in the side of CrowdStrike, as they obviously had an awful day. We'll get to Tesla's technical analysis here in a moment, but here's the S&P 500, folks. We have been on obviously just a breakneck uptrend. We are well up and above. We've been expecting pullbacks to some degree. We are actually at a very interesting area with the S&P 500. This is something that I'm going to monitor very closely as we head into next week. This is an area where, at least in the shorter term, intermediate uptrend that's been intact really for a while now, since October of 2023. This is actually an area where you would expect to find some footing and actually make a new high probably later this month or into next month. Certainly with the catalyst of earnings coming up with all of these companies, that's certainly something that can do it. Now, if you break down from here, I think that's more exciting for the S&P 500. We would take away this uptrend, but we'd be looking for pullbacks probably in the 5,200 area for the S&P 500. The news is going to be bad. It's going to be, hey, recession is here. Inflation's not going away. The rate cuts aren't going to do anything. Those types of things. News going to be bad. That is where you're going to want to step in. Now, Meta reports their earnings again. About 12 days from now, we've been going more or less kind of sideways with Meta for a little while, between about 450 and we've peaked up to about 540 on this one. If it wasn't for the company reporting their earnings really soon, I actually think this is an area where you can step in. You've got some support for the shares right about 450. You've got upside to a new higher high, probably all the way up to 550. I'd wait around for earnings on this one. You get a break below any of those levels. You got a gap in the chart. There's an excellent level, probably south of about, we'll call it 420, if you will, on Meta, if that materializes. Now, moving on to Apple, also has been on this breakneck trend. That baby is canceled out. Looks like to me, got weakness in Apple as they report their earnings on August 1st. It's going to be difficult for Apple to provide any type of upside surprises. I think you continue to see weakness in Apple. Those pullbacks certainly south of 200. those should be bought. Now, here's the chart of the week, probably with Amazon continuing to make higher highs, but major weakness over the past couple of weeks puts you into an area where if you want to buy Amazon, this is an area where you can step in. It's not where you unload the clip, considering the company is reporting their earnings also on August 31st, but these are areas that you can look for. Now, Netflix got rejected. This could be a sign of things to come, that a lot of these stocks kind of ran up into all-time highs, then reported earnings and guidance, which was just more or less mediocre or okay, and you get rejected with Netflix, just like we talked about in our videos. Anything south of 600 looks interesting on this one. Now, NVIDIA, despite the 10% drop on shares this week, still looks really good. Obviously, you have like a near decade-long trend, which is still intact. We are at the top of a decade-long trend. Those are areas where I'm not really excited about starting a new position in NVIDIA. You certainly can get caught off sides as well when you start these positions. If you are buying NVIDIA for the very first time at these levels, you are doing it at very small incremental levels. Let's assume that you want 100 shares of NVIDIA at some point. You've got the money in your account and you're ready to go. I'd be buying this thing like in 5, maybe 10 share increments. Again, that's if you want 100 shares of NVIDIA, because if you break these levels, there's going to be even better buying opportunities. But just like the S&P 500, we are converging on 2 different support levels. One is the top of the channel, which provides some area of support on a back test. You're also got this shorter term uptrend, which has been intact, more like an intermediate uptrend since October of 2022. So you've got a near 2-year really steep channel. These channels eventually crap out. Could it be right now? It would be a logical area, honestly. Now, unlike the rest of these stocks, NVIDIA doesn't report their earnings until August 28th. So we've got a couple of weeks, but we'll hear from Broadcom. We'll hear from Intel. We'll hear from AMD. So that could create some selling pressure. We'll talk more about this on our chip stock show. Again, link in the description down below to my alternative channel. And I want to see you guys over there this weekend, where we'll recap basically all the chip sectors. We'll go through the technical analysis. Basically a very similar show to what we do here, but just focused on the chip sector. NVIDIA, we're watching this just like the S&P 500 next week. Now, moving on to Google, also very much like Apple, we've been on this very steep uptrend really since March of this year. Well, that's over because you've decisively kind of broke through that. And that is a good thing, because these steep uptrends, look, especially on companies this size, they just cannot last. We're looking for Google pullbacks in Google. Certainly after earnings, it would be nice if you got this one anywhere south of, you probably call it like 164, 165. Anywhere south of that, you get weakness in Google when they report their earnings on July 23rd. That is your time to move. Now, moving on to Microsoft, you have an opportunity here. So I have a long position in Microsoft. That's in an IRA account. I open that account maybe 3 or 4 times a year. I almost never look at my long account. Look, the value goes up and down, but if you're not selling for 20 years, there's no reason to ever open the account. But I have trading account. I've got a Schwab account. I've got a Robinhood account. Got a couple bucks in each of those accounts. I've been trading Microsoft. So last time we bought it somewhere in here, played this run up. Now I didn't sell it at this perfect high. I sold it on, I think this big red candle was kind of a reversal signal. Sold it here, made about, I think 12% in that short period of time. Well, here you are with Microsoft on Monday. I was busy today. We were at Legoland and those types of things. Otherwise, I would have bought Microsoft today. But Monday, as long as you don't have like a big gap up in Microsoft, that's your opportunity. Setting a stop loss probably down here at these lows at 400. I know that's like kind of risking a lot. You're risking like $30, but your upside is, I mean, you can't even get the upside almost back on the chart. It's probably a new high up to like 490-ish. So you've got $60 upside, $30 downside. You could tighten up that stop loss as well if you don't want to play the downside as much with Microsoft. So that's kind of your trade setup. Also, long positions, you could add a very small amount. The problem, if we weren't near earnings, this would be basically a no-brainer, as again, this uptrend has been intact since November of 2022. And here you are at the bottom of the channel. But Microsoft reports their earnings in 10 days from now, on July 29th, so it complicates the situation a little bit. Just be a little more careful as you head into earnings. We'll certainly be here for you on the 29th when Microsoft reports those earnings. Now, Tesla had a monster breakout from the downtrend that it was in. Now we're consolidating and hovering at this area. That's actually a really good sign. The fact that you broke out of this trend and now you're kind of just flagging out up here. You're waiting for earnings with Tesla, which again are on July 23rd. Not a lot can be reported from a financial standpoint, but obviously you get Elon Musk unfiltered on a conference call for like an hour and a half, 2 hours answering questions, and anything can happen. Pushes higher with Tesla. Probably should be sold if it's a shorter term position. Anything pushing up into the $300 level, you're going to meet heavy resistance as Tesla approaches 300. Any breach above 300 also. Just a lot of these people that accumulated these shares 2-3 years ago have been stuck in them. So you should see some selling pressure as you move up in this direction. But with Tesla, at least from the long end, what you're looking for is a bottom down here and an uptrend that starts to look like this, at least in kind of the shorter to intermediate term. We'll obviously get earnings in just 4 days. That'll give us some clues if this uptrend with Tesla could potentially emerge. Folks, that was FAANG Stock Recap Show for Friday, July 19th. Again, link down below to our other YouTube channel. I've got a lot of things coming. I've got some great partners that I'm bringing along. We're going to bring a lot of content, hopefully a lot of it actually being free. We're starting a semiconductor show this Sunday, and I hope to see you there. Again, link down below if you haven't subscribed already. Thanks for tuning in. Have a safe and fun weekend. Good luck with your investments.